England has officially lifted its 4-week lockdown. The country shut down in early November because of rising COVID cases. It will now return to a tiered system of restrictions. Researchers say infections dropped by 30% during the lockdown. Still, England and the rest of the world have a dark winter ahead. That much is clear, according to the former governor of the Bank of England. I spoke exclusively to Mark Carney about the path to recovery and what damage could remain.
The shorter-term contours are relatively straightforward. It's going to be a bleak winter, followed by a better spring and potentially quite a strong growth in the summer. But what really matters is how much of our economy, and to put a personal element on it, businesses and jobs emerge from that. It depends, quite frankly. What we have seen thus far is that we've been able to preserve a lot of those jobs and those businesses. It's going to get tougher over the course of the next 6 months. That's why continued fiscal support is important in all our economies, supported by the central banks. But then what we really need to do is, as we come out of this, and there'll be a natural bounce out of this as people, are unleashed, able to spend again. We then need to set the direction for the economy. What do we care about? What are we building? Are we building a more sustainable economy? How are we adjusting on the digital side? What are we doing on the trade side? All those questions are going to need to be answered. And it's the answers to those questions which will determine how aggressive business is in terms of investing for the future and creating a better environment for all of us.
That debate is the one nobody really wants, because as the Chancellor said in the UK, you're talking about having to make decisions about which jobs aren't viable, which industries, who has lost their job never to work again. Not through their own fault, but because the acceleration of digitization has completely has created the fourth industrial.
If I may, I think part of the answer is in the question, which is aren't viable. If those jobs aren't viable, they can't be resuscitated, but those workers can be helped to move to the new jobs that are born, if I keep the analogy. And that is part of the challenge. But there are other cases where there are businesses that have had to pile on debt because their entire industry was shut down. Think of transportation, the airlines, for example. I saw your piece a couple of weeks ago of you being one of the few passengers on a transatlantic flight. It was very good. But it shows you, what people are leaning into in those industries. But we're still going to need an airline industry going forward. It may be a different size, different capacities. And those are the tough decisions, the jobs and the businesses that are still needed, but won't necessarily be able to relaunch given the very, very difficult year they've had.
Why are you optimistic that policymakers can have that debate and discussion, deciding what they want, society, jobs, all those issues you've talked about, in 10 years, when companies look at the next quarterly cycle and politicians look no further than the next election?
Oh, well, look, one of the things when you're a policymaker, when you're a senior business person, when you're an individual, you've got a family and other things, you have to be able to do more than one thing at one time. And of course, it's necessary to support businesses, viable businesses, viable businesses. And if they're not viable businesses, help them wind down, help those workers move into new jobs. It's absolutely essential. But part of the way you do that is you ensure that the economy is going to grow on a sustained basis. That's what gives people confidence. That's what causes investment. That's what creates the jobs of the future. You have to create the jobs of the future. You can't spend all the time looking back at the past. And one of the things we have learned over a very difficult 2020 is some of the acceleration of adjustments in our economy.
The question of Brexit. I mean, you must, I'm surprised you don't hear the word and sort of have an involuntary twitch at the mention of it. You lived it, you saw it through, you stayed on longer than you'd planned to. But if there's, the talk is of a skinny agreement by the end of the year. Is that your understanding?
Well, it's certainly relative to obviously relative to membership of the European Union, it is thinner, but even relative to something akin to some of the more comprehensive trade agreements that Europe has signed with some of its partners, it's likely to be thinner than that. However, these negotiations are ongoing, and it would be promising to have arrangements in the areas that are being discussed. But look, it's unlikely to have common standards, any sort of equivalence arrangements for financial services. Potentially rules of origin will become quite important, all seemingly technical issues, but really practical issues for business. So there will be some adjustment that will come out of whatever agreement is reached.
The current governor, your successor, says that if there is a no-deal Brexit, it will be dreadful. Do you agree?
I think what the governor was saying, as I recall, at least what I did see, was that the longer-term impact of some forms of Brexit could be greater than the longer-term impacts of COVID. And that loops back, if I can go back on COVID, to what we were talking about at the start, which is that the policies of the governments in terms of supporting workers and businesses and of the central banks in keeping the system going is likely to mean, as we sit here today, less of a scarring or reduction in the production in the capacity of the economy than otherwise would have been the case. So it's a sign more of success on the COVID front.
We'll have more of our interview with Mark Carney on tomorrow's programme.